September has been a month where a lot of listings have piled up on the market, and the inventory in the Calgary real estate market has gone up once again. And there's not enough sales happening to take all those listings off the market. However, if you are in the Calgary real estate market, either looking to buy or sell, there are a lot of undercurrents happening in the market in different parts, depending on which community and segment you look at. And if you just look at the overall data, and you take that as the truth for how you should react in the Calgary real estate market, then you may be very wrong. And that's what I'm trying to point out in today's video. As we go over the overall stats, I'm also going to call out what are the specific scenarios that we are seeing play out in specific parts of the city. And if you are participating in that part of the segment, then it will be very, very important for you to understand how that works and how you should be preparing yourself for the next couple of months. Before we get started, welcome back to this channel if you've been watching this channel for a while. And I see that a lot of y'all keep watching my videos but still haven't subscribed. So definitely subscribe, because then you will get updated as soon as a new video comes out. And it also helps reach more people like you. This is a channel all about Calgary real estate, Canada real estate, and policies and government shifts that impact the housing market in Canada. Now, two things I absolutely have to call out. I have a buyer guide and a community guide down in the description below. The community guide especially receives a lot of good feedback. It's extremely helpful because it takes a different approach from what you're able to find online. It just goes beyond just stats and amenities and everything. It also goes into the actual vibe of a community, what it feels like living in that community, even feedback from people who have lived there. And it gives you a real perspective on what you can expect in terms of lifestyle after you move into those communities. So definitely get that community guide if you're looking to either move to Calgary or move from one community in Calgary to another. And the buyer guide, of course, top down, everything from psychology of a buyer to how you should work yourself into the market and not feel pressured at any point and avoid making the huge mistakes that I see a lot of buyers make. And I really want you to not make those same mistakes, so make sure you get the buyer guide. Now, without further ado, let's get right into the video. So first, we'll start out with the summary by the Calgary Real Estate Board. As you can see here, the headlines is a boost in new listings drives further inventory gains and price adjustments. So the 1,720 sales in September were not high enough to offset the 3,782 listings that came onto the market. This drove further inventory gains as we move into the fall season. Now, as we know, during the fall market, as we come off the spring, it's expected that sales are going to drop for a bit. And then in the fall market, you're going to expect a little bit more boost in sales. And then after that, we drop into the winter market. So there were 6,916 units in inventory in September, 36% higher than last year and over 17% higher than traditionally reported in September. So both row and apartment style homes are the ones that reported large boosts in supply compared to longer term trends. So those are the two main sectors that's really driving a lot of these inventory gains. Resale markets have had more competition from new homes and additional supply in the rental market, so reducing the sense of urgency among potential purchasers. A lot of people pushing their purchase down the line, expecting either further drops in prices or just don't feel an urgency to need to get into the market right now, with rate cuts starting up again and a couple more rate cuts. And there's a lot to do with that in terms of the strategy and the way you approach the market. But with that, together with the amount of rentals that we are seeing come on the market, is just dropping the amount of urgency that we have. Ultimately, the additional supply choice is weighing on home prices. In September, the sales to new listings ratio dipped to 45%. Now that is very, very low. We were about 56%, I think, last month. So that's about a 10% drop. And the months of supply pushed up to 4 months for the first time since early 2020. Inventory gains for apartment style homes over the past several months have contributed to buyer market condition in this segment, driving year-over-year price adjustments of over 6% for a total benchmark price of $322,000. So apartment style homes is the ones that's been suffering the most in terms of the price drops, of the just high amount of availability in the market. So there's not much competition and sellers are having a very hard time. While the detached segment has also seen a rise in the months of supply, it has not been as high as the apartment condo sector. and the benchmark price of 749,000. So detached home prices are only 1% lower than last year, with the most adjustments driven by Northeast and North districts. So Northeast has rampant construction happening, and so there is, with the drop of demand, there's a huge amount of oversupply in the Northeast, and that's why they're seeing the most price drops. But even that pales in comparison to what we're seeing in the apartments and townhome sector. Now, this is something that's really important because reading this, you think there's just a lot of supply in the market. You can wait on the sidelines and just wait for prices to continue dropping, and the market's just on a continuous downward trend. However, depending on what property type you're looking for, things could paint a very different picture. And so I wanted to take just one snapshot of a part of the market that actually is pretty popular now at this time, even with buyers, and therefore paints a very different picture from what we're seeing in the overall market. So right here, if you look at the number of active listings that we have, and this is for residential in Calgary detached properties in the affordable price range, so 700,000 and lesser, and 3 bedrooms. So this is your most common what the starting buyers look for, whether it's your first-time home buyer or people looking to move up from an apartment or townhome. This is generally a very, very common search, right? So across the market, as you can see, the inventory has more or less been just going sideways with a slight drop month over month from last month. And overall, we are still trending downwards. So we still have a lot of supply in the market, a lot of options, and this might be exactly what you're looking for, and you don't have a problem on waiting for a little bit more and seeing what happens and comes on the market. However, if we fine tune this a little bit more to focus, for example, only on Southeast, and that is a popular segment where a lot of people are looking to move to the Southeast. I have a couple buyers right now on the go. And for example, if you're an expanding family and that's one of your motivators to why you want to get into the like a bigger home, so you're trying to find more value for your buck and you're trying to get into maybe like a 4 bedroom residential detached, as you can see, a dramatic shift from what we saw in the previous graph. So this again sticks with the same price range, about 700,000, the affordable price range, 4 bedrooms and about 1,500 square feet. Because if you're going for 4 bedrooms, you do want at least 1,500 square feet so that the secondary bedrooms don't feel too small. And remember, this doesn't even account for whether you need a garage or detached, a finished basement, all of that. So as you can see, if you were looking for a property back in June, July, when we had peak fear, you still had a lot of options available in the market, about 75. Now we're sitting below 60. We are probably at about 50. So that is dropping dramatically as the months go by. So while the overall picture does paint an increase in inventory, depending on what property type you're looking to get into or which community and which part of the market you're looking to get into, and this also actually applies to Northwest. So when I pulled the same graph for Northwest, it showed the same picture where we saw a dramatic drop in listings for Northwest for this particular type of property. And so you might be waiting really long to wait into the winter months to try and get ahead of the market thinking you're going to get a huge price advantage. But what's going to happen is whatever buyers are right now in the market are going to eat up the best properties that we have left. Because my next graph is going to show you why I think prices will not drop as low as you think. And because of that, a lot of the good properties that are on the market right now will actually get absorbed. And then what will be left by winter is stuff that other people didn't want and just desperate sellers that absolutely have to sell their property. Now, why do I say that a lot of the properties that stay on the market will not have dramatic price drops as you're expecting, especially the good ones? Because something that you look, so this is a market watch, this is something we observe on a weekly basis, sometimes even on a per every 3 days or on a daily basis to see whether market's shifting and trending. So as you can see, for the last 7 days, we've had 866 listings. However, in the same amount of time, we've had 391 listings expire. And that is highly unusual. Usually this is around 60, 70. So what this shows is that sellers are being extremely stubborn with their pricing right now and do not necessarily agree with extreme lowball offers that the buyers are putting in. So because and this goes back to something that I said a couple months back in my market updates, is that sellers have the option now to be a lot more stubborn because of the amount of gains that we've seen in prices over the last 3 years. All the sellers are sitting on a huge cushion of equity in their property. And so, in terms of the number of people that will actually go underwater or absolutely have to sell, are very, very less. It's unless you lose your job or are unable to make those mortgage payments, because we are not even in a rising interest rate environment anymore. In fact, we are seeing rate cuts. So a lot of those people have the luxury to demand the price that they want. Of course, all properties are seeing price drops, but not in the range of 100, 150,000 that most people are expecting. People are waiting for 20%, 30% corrections. Those are not going to happen just because there's a lot of leverage that sellers have in terms of they know they can just sit in that property and they don't absolutely have to sell. And so this is very, very unusual to have 391 expireds all within a single week. That's over 30%. That's almost 40% of new listings. That's extremely high. And that's why I feel a lot of good properties where the seller doesn't have the need to sell will go off market. And if they don't sell for the price that they want, and then if you just wait around too long waiting for the price, then you'll miss out on the other three factors, which is the trifecta of the real estate market, which I feel people have a huge advantage of right now versus the last 3 years. In the last 3 years, people couldn't easily pick the location, condition, and price. Now you're sitting in that perfect condition where you can take advantage of the amount of listings that we have on the market, but also take advantage of the sentiment. So you can get condition, location, and price all at this time. And so right now, between now and December, I think is when the best deals are to be had. In December, you could get slightly lower price, 100% for sure, but you cannot guarantee the location. So if you absolutely want to get into a lake community, or you want to not be adjacent to the highway, or you want to be on a cul-de-sac, or you want to be walking distance to a school, now is the time to leverage those properties. If you don't mind too much on the location, you just have an overall community or overall part of the city that you're looking in, then maybe you could wait a little bit more, but know that you will run out of listings slowly as we head into the winter months. And now there are going to be a lot of people on this video, I know 100% down in the comments, saying that I just absolutely want to sell properties, and it's not about that. It's purely what the data is saying. And whether you buy now or you wait in a couple months and then buy, it makes no difference to me. But this is what I would do when I see the data in this market, just based on how I understand how the data works now and how we see things shifting in the market. So if that's you and you want to get into the market, reach out right now. We set you up with a game plan. Depending on what you're looking for, I might even advise you to wait a couple months versus buying now. And whether you're looking to buy a new build or resale, things might be very different. And I feel I've spent enough time now on this couple images because it's extremely important compared to the rest of the data that we just get by the Calgary Real Estate Board, because it paints a picture of how to approach this market depending on segment or community that you're looking to get into, because there's no blanket sentiment that's going to apply to the entire market. Now moving on to the exact benchmark prices that we are seeing in the city. So as you can see here, the total residential benchmark price is now at $572,000. So year over year, that's dropped by 4%, and month over month, that's a drop of $4,000. Detached price is at $749,900. So that's just barely a 1% drop year over year. That's almost nothing, and in most communities, they've actually gone up. Semi-detached price is at $684,800. So that's an increase of about 1% and a month-on-month drop of $3,000. Row townhomes, however, have gone down by almost 5% to $437,100. So if you're an entry-level buyer, you're just trying to get into the market, you don't want to spend too much, but you want to have a feeling that you have your own backyard or just a front yard, a porch that you can sit on, and you don't want to get into an apartment, now could be a key time to get a lot of those deals, because a lot of the negative sentiment from the apartments is leaking into the row townhome prices. And so there's advantage to be taken in terms of what kind of deals we can find in the city. And the apartment prices, as you can see here, we are at $322,900. That's almost a 6.5% drop year over year, and a month over month drop of $3,600. Now moving on to the benchmark prices across different parts of the city. As you can see in the north, we are at 534,900. Northeast 485,000. East we are at 409,000. Southeast is at 563,800. In the south we are at 569,100. City center at 576,800. West is at 707,000. We've actually gone up month over month by about $300, which is very nominal, but they've actually held well compared to all other parts of the market. And Northwest still holding relatively strong compared to a lot of these other losses. So they dropped by just $2,100 to $633,200 this month. So surprisingly, East, I would have expected bigger losses, but it's just possible that we have not as many listings maybe come on the market, but year over year they're still significantly down by 6.5%. And Northeast, of course, is losing tremendously, all because of those high amounts of multifamily units that is coming up in the Northeast. So it's down by 7.9%, but even detached properties in Northeast are going down quite a bit. Now, when we take a look at the benchmark pricing, this is primarily for buyers to know which part of the market you can get into. I'm not going to explain this graph too much, but what you want to do is identify the segment that you want to get into and what your price range is. And if you don't like the communities that price range has, then you move either one down if you want to be able to afford in more communities, or if you want to get to a specific community but want to get into detached, then you move up. And so this gives you a clear idea of what you can afford across the city, and I find this extremely helpful for buyers to look at. So definitely take a time, pause the screen, and take a look at it. As far as sellers go, this is what you can expect in terms of year-over-year price growth comparisons. So as you can see across the market, primarily only detached maybe a little bit has ups, but everywhere we are seeing negatives year over year. And duplex is doing relatively well, especially in these three, so city center, northwest, and west. And actually southeast is at zero. Yeah, because I was surprised southeast didn't have positive gains, but actually southeast is just zero. So that's why. So southeast is also doing pretty well in terms of the pricing for properties compared to other areas. And of course, northeast is the biggest loser across all properties. You can see dramatic drops everywhere, and especially apartments, because I said rampant construction happening in northeast for apartments. So even more than 10% drops, and even for row townhomes over 10% drops. Now getting into the amount of sales that we saw month over month. So we can see we are at 1,722 sales. Last month we were at 1,989. So of course we're coming off the spring market. We're going to expect a bit of a drop in sales for a little bit. It might go up next month, but it's very, very temporary. Considering that we were not able to hold the spring market this month as long as this year as last year, I expect the same thing to apply for fall. So generally a fall market, we are able to hold it up for about 3 weeks. But if the case is the same, then I expect only a surge in sales for about a week, which I don't know it will be enough to bring up the sales for the data for the whole month. So this could either be up or down next month, but it won't drop as dramatic as this, because we should have at least 1 week of peak sales compared to where we are at right now. And as far as total sales go, you can see here for the past decade, all the way back to 2011. So sales overall is still relatively healthy no matter what the headlines tell you, because we have definitely had way worse years. It's just that in comparison to where we were over the last 3 years that led to this dramatic increase in pricing, we have dropped and we are more or less stabilizing. And when we look at the new listings, we're at 3,782 new listings this month, which is pretty high. So we've gone the opposite direction as far as the number of listings coming on the market. And that's what happens when people prepare for the fall. So listings come first, then the remaining buyers who still want to buy in the fall time will now enter the market in October. And then after that, both of them will drop off. So last month we were at 3,478. And year over year in terms of listings, it's just an increase of 2.6%. As far as inventory goes, we are at 6,916. That's because, of course, sales gone the other way, listings have gone up. So now that's resulted in an increase of inventory of about 300 or 250. So not a whole lot, and very specifically more in apartments and townhomes. So you're still seeing some competition in detached depending on how you price your property and how you stage it. Very, very important to go above and beyond in this market to market your property correctly, because if you price your property wrong and you're staying on the market, now buyers start questioning what's wrong with your property, and then they just primarily look at the new listings instead of looking at your property, even though you do price drops. Now, as far as the total inventory goes, that's something else that's changed dramatically over the last 2-3 years. So over the last 2-3 years, we had very low inventory, and that's been increasing year over year. But as you can see, we are pretty close to all-time highs in terms of the month of September. 2018 is when we had the highest point, but we're pretty high up there when we compare ourselves to all the way back to 2011. Now, looking at the months of supply, we are at 4.2. This is the biggest shift in terms of months of supply we've seen for the past couple months. So months of supply has been going up, but not at this pace. So this is a dramatic shift for sure. And a lot of that is driven by just months of supply increase across all segments, but also mostly by multifamily. So townhomes and apartments is where the months of supply has gone up dramatically. And year over year, you can see compared to last year, we are up by 58%, which is a lot. Now, this is an interesting graph, which just shows you that months of supply by property type and by segment. So if you're looking to get into the market, this is going to drive what your experience is going to be like to try and find that home. Because as you can see here, the red lines, I've taken the data from last month and marked it on the top of this graph. It's very tedious, but I do it for you guys so you can get an idea of what the shift in sentiment is going to be like. So what that means is if the red line was far below here, and now for this month we are way up here, for example, you can see in apartments in Northeast, you're going to experience a lot more options. So you're going to have a lot more options as a buyer to explore, a lot more bargaining power, but as a seller, you're going to have a harder time selling because now there's more inventory available on the market. Versus when you go the other way, let's see, where have we gone the other way? It's very little. So in row townhomes, for example, in the south, we've actually dropped in terms of months of supply. So it's going to be more competitive as a buyer a little bit in the south if you're looking for a townhome versus, and as a seller, you're going to have an easier time because now there's lesser inventory available, and that's where the inventory got absorbed. So that's how you read this graph. So pick where you are, which segment, which part of the city, and you'll know what you can experience. One thing we can observe overall, as you can see, duplex has gone up quite a bit in a lot of parts of the city. And then, of course, apartments and townhomes. Townhomes primarily right here in southeast and northeast is where we've seen dramatic shifts. In fact, east is interesting because east has seen a dramatic drop for townhomes which is interesting. I think all those MLI Select projects have finally sold, and so you've got a drop in inventory from there. So there's just a supply shock. And yeah, that's how you read this graph, whether you're a buyer or seller. Now you know how to interpret it. Now let's take a quick look at the summary for each property type. This will give you an idea of the exact sentiment that each segment is experiencing. So sales in September slowed to 859 units. That's 9% lower than last year and definitely below longer term trends for September. So sales are slow and detached right now. At the same time, new listings actually rose to 1,900, so almost double, causing the sales to new listings ratio to actually fall to 45%, which is very, very low for any given segment. Of course, other segments are experiencing worse off. Detached and duplex are still holding up relatively well. Improved supply choice is causing prices to decline relative to the record highs reported during the spring. As of September, the unadjusted benchmark price was $749,000, nearly down by 1% from last month and last year, while prices have eased from peak levels across all districts. The largest decline occurred in the Northeast and East district at over 6%. So of course, Northeast and East, no matter what property type, they are going to experience the worst in terms of the price drops and the difficulty to sell. Despite recent adjustments on a year-to-date basis, prices remain nearly 2% higher than last year's levels, within the city center reporting the highest gain at over 4%. So city center is doing really well when it comes to detached because they're up by almost 4% right now. When we look at duplex homes, new listings rose to 361 units in September, while sales fell to 156 units. So this caused the sales to new listings ratio to drop to actually 43%. This also caused a rise in inventory levels, and the months of supply pushed up to nearly 4 months of supply. So it is too early to say if this trend will continue, but so far it has had a minimal impact on home prices. I do expect duplex to correct down a little bit now, but year over year we are still up by 1%, so we have some buffer before we enter the negative territory. But by winter, I do expect it to. Year to date, price growth has been highest for semi-detached homes at nearly over 3%, as this segment took longer to shift from a seller's market to one that was more balanced. So they are lagging a little bit behind. They are doing relatively well compared to everyone else. Most of the price growth was driven by gains again in the city centers. So everyone prioritized areas in these kind of markets where they would ideally like to get into. And of course, those areas continue to do well. In terms of rural townhomes, following a pullback last month, new listings posted modestly monthly gains. So the 592 listings were met with 304 sales, causing the sales to new listings ratio to fall to 51%. September inventory levels were 1,000 units, the highest September level reported since 2018, and 30% higher than longer term trends. So the largest number of gains in inventory was, of course, Northeast, which also reported the highest months of supply and price decline compared to last year. Year-to-date price adjustments have been much smaller at 1%, as declines in Northeast, North, and Southeast districts offset the gains reported in other parts of the city. As far as apartments go, the most significant adjustment in the market has actually occurred in the apartment condominium sector. As improving rental supply, we are seeing so much purpose-built rentals come on the market, and so that eases the buffer of who wants to get into the market versus there's not as much competition in the rental market anymore. If you've seen my rental video before, you know that rental prices are coming down. So that has turned off some investors and just increased the amount of supply that we have for renters through purpose-built rentals. And that has then kept people on the sidelines. Delayed adjustments in interest rates and improved selection from other property types has also slowed apartment-style demand from both first-time buyers and investors. September reported 401 sales compared to 924 new listings. So this dropped the sales to new listings ratio to 43% and caused the inventory to rise to 1,999 units. The year-to-date price adjustment has been just over 1%. Condo prices have slid across all districts compared to last September. The largest decline occurred in Northeast, over 10% in Northeast, while the smallest decline, of course, occurred in city centers. So again, city center apartments are doing relatively well compared to other areas because people eventually, if you want to buy an apartment, you want that lifestyle. You want to be in downtown. You want to have access to those amenities. Now, finally, zooming out a little bit and taking a look at the overall trend. So as you can see here, this is the total residential benchmark price and basically collects everything for apartments, rural, semi, and detached. So it's not going to reflect the fact that semi is more sideways or slightly up year over year. But what you're going to see here is where the overall market's trended in terms of inventory. So as you can see, when you look at the overall picture, like I was telling you before, it looks like inventory is going up. But when we look at specific property types and communities, like we showed at the start of this video, you can obviously tell that inventory has been dramatically dropping. So depending on which part of the market you're looking to get into, again, this is very, very important. And if you don't take anything else away from this video, this is what's very important, because I don't want to see buyers lose out on opportunities that they could have captured in this market, because more than that 10, 15,000 drop, what's really going to matter years from now is being next to that school for your kids, being next to that playground that you could get out in the morning and play with your kids, or just having that perfect home with a finished basement, a detached garage that you can set up a workshop in. No matter what your goals are, those are going to make you way more happy. That emotional factor, imagine what your family is going to feel a couple of years down the line versus that 10,000 you saved by just waiting a couple months, but then sacrificing other things about the home. So it is going to happen in certain segments. Certain people are going to lose out, and that is just because that particular segment is also parts of the market that other buyers are thinking of and they want to get into. And so that's where the inventory is going to drop. But overall, as far as the total market goes, inventory is going up, sales is going the other way, which is obviously going to result in benchmark price dropping month. And so that was it for this month's video. Overall, as you can see, what's happening in the market right now, we are going to continue building inventory in certain parts of the market. The market absolutely has to correct. Over the last 3 years, we've seen double-digit gains in the Calgary real estate market. But if you are a first-time home buyer, there might be a lot of opportunities in the coming months, depending on which segment you're looking to get into, especially the entry-level segment. If you're looking to buy an apartment or row town home, I would probably tell you to wait. I would tell you, don't wait, don't buy right now. In fact, I had a buyer literally reach out just yesterday, and she had a wider timeline. She reached out very early and told me what her goals were. I told her we're going to talk in 6 months, because now is not the time to buy if you're looking for apartments or townhomes. Of course, it comes down to which part of the city you're looking at. If you have very specific requests, for example, you want to be next to the Boer River, right in downtown, walking distance to Prince Island Park, or you want to be in Bridgeland, then probably we need to look at slightly different criteria and just have an eye out on the market to see when that perfect listing comes in that matches your criteria. But if you're more flexible, if you're looking for something just overall in southeast or south, and you just need to be next to a transit station, then we could have a bigger wide horizon for you, plan that, make that game plan for you, and see what works best. But however, if you're looking to get a detached and you need access to certain schools, certain playgrounds, then you need to be a little bit more proactive, because certain properties will go off the market. And guess what's going to happen next year? When spring market comes and those sellers come back on the market, they're going to expect more out of that spring market, because that's going to be an increase in sales for sure. Even though the sales is going to be lower next year compared to what we had last year, they're still going to be higher than what we have now. And so they will price their property 5,000-10,000 above what they did right now, versus now they're a little beaten up. There's negative sentiment that you can take advantage of. Next spring, there would have already been 3-4 interest rate cuts. There's more going to be a bit more optimism in the market. More people who are waiting on the sidelines, just like you, will come in, and there's just going to be a little bit more competition. Of course, you're not going to have anything like the last 3 years, but it's going to be a different picture than what you can experience in the market right now. So depending on who you are, which community, which market you're looking to get into, definitely reach out and we'll set you up with a game plan to see what's best for you and your family. Hopefully you enjoyed this video. Thanks for staying tuned to the end, and I'll see you guys in the next video. Take care.